General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay, so let's do this. Friday was the 21st. So, no need for this. I just really need the target. This was the target. Target was hit. Simple. That goes into the journal. Cool. So now we're on week 4. That's going to be March the 24th through the 28th. It just felt like that was 4 days, but that's correct. So 2 plus 4 is 8. It's like, what? Okay, let's go here. Sentiment survey. Let's go. Still bearish for the most part. Cash on the side went down. It seems more money is going towards the bullish side. $19, $20, $21 went up 2%, went down 1%, went down 1%. Sentiment is bearish. No need to overthink. Let's look at this VIX CLT, CLTC. CBOE. No, CBOT. Let's look at last week. We had 177 to 158. Last week was 177 to 158. This week is 149 to 153. So long positions and commercials went down as well as short positions went down. Let me put it in ChatGPT. Analyze this COT data. Let's go do this. Oh, this is good. De-risking. Oh, this is good. Just says 318. When does the COT come out? Yeah, so one should have came out Friday, but this came out the 18th. So why? And when is it next coming out? Let's see. March. Oh, okay. So this did come out, and it's saying the one from last week. Okay, that makes sense. Then the next one comes out the 28th. So let's make sure this is correct. All right, cool. Let me go look at Nasdaq. All right, cool. I'm gonna add this to the thing. Total open interest. Significant decrease suggests declining in interest or unwinding of positions across the board. Non-commercials. Longs increased by 7,000. Shorts decreased by 16,000. Speculators get more bullish on the VIX. Hedgers, commercials are reducing positions on both sides, de-risking. Small traders reducing both sides, net slightly bearish. Commercials are the biggest players, but speculators are increasingly bullish. Net speculation position shift. Tuning more bullish on volatility, reducing both long and short, likely due to reduced hedging needs for positioning for less volatility. Decreased in open position and open interest suggests liquidation or loss of conviction from participants. When speculators non-commercials build net long positions in fixed futures, it often implies expectancy of increased market volatility or downside risk in equities. However, with commercials reducing shorts, it may suggest less need to hedge, implying some stability expectation ahead. The combined picture is mixed but tightly, with tilting slightly bullish on volatility in the near term. And this is good. Let's add that. That was a good paste. I like that paste. Let's go to the news. Forex Factory. Let's look at the week. Okay. This is a lot, really. It's a big news week. PMI Monday, GDP unemployment Thursday, PCE Friday. Okay. Monday and Thursday and Friday are red photo news days. Monday, Thursday, and Friday, red photo news days. This can be a one-sided week. With PMI data on Monday. The market is looking for bad news. If the news is bad, it will mean more likely the Fed can cut rates. Good news will mean the Fed doesn't have to do anything. The market wants 3 cuts this year. The dot plot suggest we only getting 2 cuts. Trump perfect is still in order with the tariff and war news. Trump's going to talk this week and it's not on the calendar. Yeah. CME Fed Watch. I believe this is going down. Chance for rate cut. I believe we was at 19 before. This is 7th of May. We only got a 14% chance of a rate cut. We got this week's data and April data. To still come through. I think NFP, CPI, and PCE will determine if this number change. I'm thinking no rate cut in May. With the first rate cut being in June. Let's look at June 17th, June 18th. Close enough. 79 or 77. That's a decent percentage. %7 chance of a rate cut in June. I'm thinking this one will be certain. Earnings. I know it's nothing for NASDAQ. That whole season is over. KB, GameStop. Roaring Kitty's been quiet. Dollar Tree's important. Economic, but it's not going to move. Lululemon, good company. Nothing NASDAQ related. This week. It's just good to do that because sometimes you'll forget. And then you'll be sitting there looking sick. CFTC. You'll be sitting there like in a swing trade in the middle of NVIDIA earnings. And that's just crazy. And it's irresponsible not to know the news or the earnings or things that affect the things that you trade. See this. Okay, let's go to last week. I had three of them last week. That's the 163 to 209. $163 to 209 last week. This week is 153 to 195. Decrease on both sides. Just like the VIX. This could be a wait and see week. Overall, commercials are still bearish. Let's put that in. Let's put that in chat, see what's going on. Total open interest, slight increase. Mild new positioning interest. Non-commercials, bullish. Change from last week. Spread trading. So they playing both sides. Non-commercials. Net position bearish. Bias hedging. Do some but more mildly less bearish. Strong bullish. The non-reportable small guys. Commercials are dominating. Non-commercials. Hedgers still control the bulk of the market, but small traders and spread positions are growing in influence. General bullish sentiment. Commercials trimming shorts and a slightly positive signal. Increase in total open interest shows new capital entering. Speculators cut both long and short. Reduced conviction. Raising spreads may mean uncertainty with traders hedging or bracketing trades. Small traders increasing shorts may reflect early signs of concern. Speculators still bullish overall, but hedging more via spreads. Commercials remain net short, but slightly less bearish. Small traders, strong bullish buyers. Those slightly nervous, cautiously bullish, but the increase in spread and mixed signals hint of potential choppiness or consolidation. It's like a wait and see. It's a wait and see week. Let's put that on here too. Let's get oh, that's a good paste. Yeah, underline that word. Let me look at the dollar on a daily. I don't even need this. Let's make sure the other one don't got it. Okay. I need dollar on a daily. We're coming up to the area I wanted. This is good. Still looking for dollar to hit that imbalance. That's where I want orders paired to get more short positions. Let's look at the seasonality. That's not dollar. Where's Dixie? Here. End of March. Then April creates new lows. Dollar rallies in October. Yeah. Right now we're spiking up. Seasonality says bullish dollar. End of March going into April. I think Trump effect, tariff. I think it's 1R, etc. is kind of messing with dollar. But overall, after the dust settle, I can see dollar getting strength based on his America First stance. If everything he do, they trying to undo. I don't think it's working though, because he has too much support. I think they just crying and throwing temper tantrums. Let's go to NASDAQ on the monthly. Ooh, look at this. This is week 4 of the month. We ain't got no new like PD arrays or nothing like that. Monthly candle is bearish. It is extremely bearish. Monthly order block is holding. I don't see nothing else. For the monthly candle to reach to. And based on those, I don't think we're going to get that much movement. Go to the weekly. This previous quarter's low. Let me take this off. I want to see. Yeah, this is previous quarter's lows right here. Okay. Weekly candle. We got this nice gap here. Let's make this white. I think that's on the daily chart too. Oh no, I don't got it on the daily chart. See how we respected 50% of this wick, closed above it. I think previous week's high and low is going to be important. So a couple things to know here. Know how we respect it. 50%. Let's knock off its consequent encroachment of the wick gap. Also know the large weekly body housing previous week. This is a large accumulation of orders. Also note the high hasn't been swept. Let's look at this chart a little more. We also got a gap here too. Retracements and lower make sense. We just haven't retraced 1, 2, 3, 4 down weeks. Yeah, 4 down close weeks. And 1 doji. At least sweep previous week's high to induce buy stops. Let's go to the daily. Where's, okay, 2025 prices way up here. We wick this, so put an X here. That Monday's high still in play. Swept this, breaking highs, still in this gap. Okay. Nope. We swept. What's the low of the down candle? This is Tuesday's low, Tuesday, March 18th. Okay, last Tuesday's low. Pushed up the old fair value gap. Has been holding price. A run on buy side makes sense now. No daily fair value gaps. So that's a sign. Price is being held. No institutional order flow. Let's make sense of the 4 hour. Is this correct? Let me double check this. No, it's not. I don't know what's wrong with my March template. Because it should have all the stuff I be looking for every day already on it. H4. Just a daily fair value gap. We stay in this range. I'm gonna keep that there because this is the range I've been looking at, but swept this. Let me move this a little bit more. This is this line because we broke this high. We're having trouble getting back over it. This is the daily fair value gap. This monthly candle is crazy. Last swing low that was broken. We can even put this here. Don't look at this. Got a swing low right here. Did we break this one too? We can take this off because we're breaking swing lows. Too many lines. 2025 open price, previous quarter low can stay. 50% of this can stay because we're having trouble leaving this range. Line in the sand can stay. That monthly order block, and the last time we closed below a low. So this is like order block territory. This gap is kind of holding. Wick this here. Stop hunt. This is that untapped high. This range is ugly, but let's read. Push up, push down. Created a leg that broke higher. We never came back here. Did we create anything to break a swing low? No. So that's the biggest note. We're not breaking swing lows. This area is lined up with order block, previous week's high. This will be previous week's high now. So here. And where will previous week's low be? Here. We already swept that low. Previous week's high liquidity there. This will be a good target. This Monday's high and that gap too. Where would I want my entry to form? I really wouldn't mind it coming all the way back down here. There's a gap right here too. I think we can sweep this, come back, sweep this, come back, then come, like, we can go crazy. Like, we can sweep this, come back, sweep that, come back, sweep this, come back. Like, I wouldn't be surprised. just to confuse people and get people angry. Just based on structure. This is no order flow. No fair value gaps being created. Being created and used. We seeking liquidity. We sweeping liquidity back and forth. Previous week's high looks next. Then I wouldn't be surprised if we seek previous week's low and tap the order block. Just to go back up. This is a scalping condition until we get some real displacement and use fair value gaps as support or resistance. Let's go to the H1. Let me take this off. Still up under here. Lots of news from last week. All these dots are going to go away, but I'll be looking at these news. I need to know when they come in beforehand. So it stays there. Doji week. My first target will be here. Just seeing this. 20.06375. That's my first target. $20.063.75 is my first target. Be nimble this week until things settle down. Macro order flow is bearish. All the buys have been range bound. One day at a time. All right. That's that on that. I'm going to add this to the Telegram channel. We averaged that pretty fast. All right, y'all have a good day. Peace.